Hi, everyone. Happy February 14th. Happy Valentine's Day. We are heading into the 2025 tax year, so we thought this would be a good idea to share with you guys just to give you a little more information about some key dates, details, and limitations for this tax year. First off, we have our important dates. January 31st, you should have received your Form 1099-R and Q. Coming up, we have this February 15th deadline for your consolidated 1099 tax statements to be sent out. So these are always good to send over to your CPA. We can help you with this if necessary. April 15th, this is your deadline for filing your 2024 tax return if you didn't file for an extension. This is also the last day where you can make a contribution to your HSA, traditional, or Roth IRAs for the 2024 tax year. June 16th, this is the deadline for the second quarter estimated tax payments to be due if you're making estimated payments. September 15th, this is the estimated tax deadline for the third quarter. October 15th, this is the deadline if you filed for an extension, so you want to make sure you're filed at the latest by October 15th. December 31st, this is the deadline to make required minimum distributions if you're in RMD mode. So you want to make sure these are all completed by the end of 2024 for your 2024 RMDs.
Yeah, thanks, Grace. And just chime in here a little bit. So everybody's going to be scrambling to file everything with their tax software or with their tax preparers come March and April. If you need any help gathering these documents, we have access to them on your custodial sites. We can send those over to you or to your CPA or enrolled agent to get those documents in their hands so you're ready to file on time. Couple of other items there that I'll add in between the February 15th and April 15th date. If you are expecting any K1s, those usually come in mid-March. So just be mindful, look at your last year's tax returns or at your tax organizer that your CPA prepares for you, just to make sure you have everything. We don't want people filing their tax returns and then realizing, oh, I didn't submit something and I got to go amend my return. That usually adds time, makes the situation a little bit more stressful, sometimes even costs a little bit more money to do an amended return. Those quarterly payment filing dates, those are pretty standard, but it is really imperative the dates at the top, April 15th and December 31st, those are your deadlines to make important contributions. If you haven't maxed out contributions for the 2024 year, these are your IRAs, Roth IRAs, HSAs. This is a great tax strategy to help bring down taxable income before you file. So talk with us, talk with your CPA, make sure that you are maximizing those. If you have the extra cash to be able to do that, it'll ultimately mean that you're paying less total tax this year. Finally, RMDs. Our team is very proactive with the RMDs. We like to have people take these either steadily throughout the year so that they're completed by December 31st, or if you're not taking them in installments, let's try to get those done early in the year. It just alleviates a lot of stress and friction at the end of the year. The custodians, whether it's Fidelity, Schwab, you name it, they tend to get backlogged if we wait till November and December to take those. So our preference is let's get those done early in the year. We'll have a good understanding of what your tax situation is going to be. We can get you organized and get that money into your bank account or your brokerage account earlier in the year. Thanks, Grace.
Yeah. Next up, we have our federal income tax rates. So the tax rates themselves didn't change, but the income limitations were increased. So this is a good thing for you. It means that more of your income is being taxed at the same rate instead of pushing you up into that next tax bracket with a higher tax rate. So we also have an updated standard deduction for both married filing jointly and for single filers. So standard deduction is up to $30,000 if you're married filing jointly, $15,000 if you're a single filer. It's also important to note if you're over age 65, you have extra deductions available to you. So if you're married, you have a $1,600 extra deduction for each individual that's over 65. If you're a single filer, that deduction is $2,000 for you. So in total, if you're a single filer over 65, you have a $17,000 standard deduction. Anything you want to add, Justin?
Yeah, this goes back to the last tax webinar we did right before the end of the year in 2024. These these brackets, these thresholds are very important for us to consider in terms of our planning work. If you're in the falling in the 22% federal tax bracket, right? So our tax system, it's progressive. You pay 10,000 or excuse me, 10% on that first 23,850, 12% on up to the next 96,950, and so on and so on. We want to look and get a sense of where are you going to fall in these brackets. And if there's extra room within, say, the 22% bracket, let's just say your income for married couple filing jointly in 2025 is going to be $120,000. Well, that gives us $86,700. So the top of that bracket is $206,700. So if we have 120, that's an extra $80,670. Excuse me, $86,700. That's money that we can take out of your IRAs and only pay 22% federal tax on it. And if we are being smart about this, and we know that your income is going to continue to rise because those RMDs that you take later in your life are going to be taxed at higher and higher amounts, maybe we want to get some of that money out in this calendar year and only pay 22%, which is historically a pretty low income tax to pay on money that comes out of an IRA. So Roth conversions, they're great for some, not for everybody, but we want to at least be mindful of these tax brackets and utilize them to our advantage to get money out of those tax deferred accounts and over to tax exempt Roth IRAs if it's the right fit for you. And Grace is going to cringe, but I say this all the time. Remember, your IRA is an IOU to the IRS. And we are going to pay tax on this money one way or the other, whether it's you or the people who inherit your account, probably your kids. So why not plan ahead and try to get that money out of there as tax efficiently as possible?
Next thing we have on this list are contribution limits for retirement accounts. So IRA contribution limits stayed the same as 2024. You can contribute $7,000 if you're under age 50, with an additional catch-up contribution of $1,000 if you're over that age 50. For your 401k and 403b plans, you can contribute up to $23,500. That's up a little from last year, with an additional catch-up contribution of $7,500 if you're over age 50. For your simple IRA, these limits are also up. You can contribute up to $16,500 with an extra $3,500 if you're over that age 50 limit. There's also a special thing we want to make sure you're aware of under Secure Act 2.0. There's a special provision starting just this year in 2025 for those age 60 through 63. You can actually contribute up to an extra $11,250, not that $7,500. So you have up to a $34,750 contribution that you can make to a 401k or 403b plan.
Yeah, and that's actually a huge provision. What we find is that people who are in their 60s, who are retirement preparers, right? They're looking to retire sometime in the next 5 to 10 years, maybe even sooner. This is an opportunity to sock away a lot more money into those tax deferred or Roth plans. And we think absolutely, if you can do that, let's make sure that it happens. The government doesn't always give us the provision to have tax advantaged money. So when it's available to us, we want to strongly consider that and use those opportunities to better ourselves for the financial future that we know we're all going to face when it comes to living off our assets in retirement. Grace, you can go to that next one,
Yep.
the Roth phase out.
So if you're contributing directly to a Roth IRA, there's an income limitation to be aware of where you no longer can contribute directly into a Roth IRA. So for 2025, those adjusted gross income limits are $236,000 if you're married and $150,000 if you're a single filer. So these are also important limitations to think about if you're going to be reaching these and you still want to contribute to a Roth IRA for 2025. It's a great option for you to do a backdoor Roth strategy. So if you're interested and you want to contribute to a Roth IRA, but think you might be earning a little bit too much this year, contact Justin or Ryan. We're happy to tell you more about this strategy and how we can help you with this.
Yeah, and not to get too much into the weeds and the how-to of the backdoor Roth, but it is definitely an important consideration. Just because you're over these income limits, that's a great thing. It does not prohibit you from still saving into a Roth, whether that's a Roth 401k that's at your company sponsored plan, or if you can empty out your IRAs and get them over to 401ks using the provision of putting after-tax dollars into your traditional IRA and immediately converting it over to a Roth. Same net effect, just a couple of extra steps that the IRS requires us to jump through in order to get that money into those tax exempt Roth IRAs.
Last little thing we have today is the HSA contribution limit. So if you're eligible to contribute to a health savings account and you're a single filer, your contribution limit for 2024 is $4,300. If you're a family and you have this family plan, you can contribute up to this $8,550. The catch-up contribution, if you're over age 55, is $1,000 for both single and family plans. But this is just a good thing to be mindful of. And if we haven't already talked to you about using your HSA for a long-term planning strategy, that's something we want to be sure to talk to you about this year. So let us know if you have an HSA and if you're interested in this more.
Yeah, and my favorite thing is think of the HSA as instead of a health savings account, consider it as a medical IRA. We all know we're going to have higher medical costs later in life, and this is a great way to help prepare yourself for those higher medical costs. One of the things that's not reflected on here is just a summary sheet, is that if you are going to be applying for Medicare, you have to stop those HSA contributions 6 months ahead of time. Otherwise, you'll have contributed an excess amount to the HSA, and we got to go in and back those out. So just something to be mindful of if you're approaching age 65 and are saving into these HSAs already. You might want to meet with us or talk to your CPA and turn off those contributions. It's not applicable to every situation. Some people can still keep doing that if they're part of a big employer plan, but there's a couple of different things to be mindful of as you're saving into the HSA. The number one thing that I'll mention is if you are accumulating funds in these health savings accounts, almost all of these providers now allow you to take a long-term investment approach with those HSA dollars. And I just read a great article the other day, how to accumulate $1 million in your HSA. Basically, the article went and said that's going to be a really hard thing for most people to do because these plans haven't been around long enough. But for our high earners in their early 30s or early 40s, this can be a meaningful tactic to help supplement the retirement savings that you're doing. And if we take this approach and look at it from a very long-term perspective, there are no better tax provisions out there than the HSA. You get a tax deduction on the way in, tax-free growth while the money is in the account, and provided it's used for medical benefits, it is a tax-free withdrawal on the funds. So this is money that you're never paying income tax on. And our belief is try to grow that money to be as fruitful for you as possible, because there's nothing else like this out there from a tax standpoint. As far as this tax work goes, this was just designed to be a quick primer and summary to get everybody prepped and ready for tax season. We are here as a resource if you need us. We're happy to help compile documents, complete tax organizers. Just give us a call. We'll be happy to spend a few minutes with you and get you organized and thinking about what are some of the things we can be doing here in 2025 to make this an even better tax year for you.
Thanks for watching.
Have a good day, everybody.